Hi everyone, welcome to today's trade of the day. And for today's trade of the day, I will be looking at pound Aussie. Right, the reason why I'm actually looking at pound Aussie is because later on this evening, we have some Aussie news. Okay, and this would be actually quite an interesting pair to watch. Okay, with the pound raising so strongly and the Aussie also pushing so strongly over the course of last week, the last 2 weeks. Just really want to find out where this pair stands. So I just want to do a quick one on the daily. Okay, I just want to zoom in on the current area, right? Technical analysis, we also try to focus on more recent prices because that's really where price action will tell us what's going on. Now, on the daily, I see a very classic pattern. Okay, we have a strong preceding trend. We see price testing this level once, bounced, came back and tested the same level again. Okay, so this is very clearly a double bottom pattern with the neckline over here. So how do we measure? So let me just put the neckline in very quickly. How do we measure the double bottom price target, right? We take the lowest of the low to the neckline, okay, for double bottom, and then we project it to the point of breakout. And we see that price is actually quite close to this level here. If I were to change the line chart, we'll see that there is this a small, very small graphical overlap here. And if I were to change my candlestick, I think I can tidy it by putting it here. Okay, so this graphical overlap is definitely a very key level. It is the double bottom price target. Okay, so we see that price actually tested as a support, broke below, came back, retest as a resistance, came back down. I'm thinking it could test here again before pulling back. Okay, so we have this on the daily. Let's quickly go down to the 4 hours. Okay, so I just want to tidy this up. Okay, over here, this spike here. Now we actually see, okay, and we actually see that price made a very strong push from the low here, came all the way up to the high here. This is one huge movement, so we can actually use Fibonacci retracement from the low to the high, open up all Fibonacci ratios, right? And we see that the daily support is actually close to the 38.2. At the same time, of course, we have a first level, which is the 23.6. So I just want to highlight the 38.2 and 23.6. Okay, so this is the level, and I just want to tidy things up a bit. Okay, just tidy it up a bit. We have a support level over here. Okay, and at the same time, another line, another support line here as well. And I'm going to draw a bullish box, a support box. Okay, so these are the support levels. Now, price is really holding in the middle of this level, right, between this level and this level. Okay, so what is happening could be that price could make a small pullback to 23 and then bounce up to this level before the daily reversal, like we said it would, to the neckline, right? Okay, so this 23, the pullback could be something like this as well, right? We've seen it happen recently. We can see it now as well. Okay, so we have this zigzag, this irregular zigzag. So let's use the Fibonacci extension, 0.1, 0.2 to 0.3. And we see that 100%, okay, we have 100% here. The 100% is actually in line with the 23.6. So whatever it is, I'm thinking price will make a push down to this level here. Okay, at least on the shorter term intraday. So very quickly, let's go down to the 1 hour. So the 1 hour, this is what we have. Okay, I can ignore this line. Okay, I can ignore this line for now, but let me just tidy it up since it's there. Okay, so this line, like I said, the two movements, I'm expecting a push down first before a push higher, and then finally completing the pattern on the daily. So we're looking at intraday. All right, so of course, the highest of the high is at this level here. Okay, so this can be easily used as our stop loss level. All right, now what we want to do is we want to look for a nice entry. Okay, the nice entry, of course, there are two entries. For the low risk, we can wait for a break of this and play a short trade. Okay, sell entry, I'll call this the low risk. Okay, a short trade, which means once price breaks below this, okay, we'll take profit anywhere in this zone here, right? So it's a very small trade. Okay, the risk reward not too great, but definitely low risk. Okay, now of course we have a high risk, which is looking at from this high, the last movement, to this low, right? There's one movement here. We can take a retracement, a very short-term intraday retracement, high to low, open off Fibonacci ratio. Okay, and we see two things. One is that the negative 61.8 falls in line with the daily support, right? At the same time, okay, at the 4-hour target, okay, not the daily support, but 4-hour target. At the same time, we have the 61.8 at this graphical overlap here. Of course, you can say the 50% works as well. All right, so I'll just use the 50% because the 50% has not yet been touched. We see that 38 has been touched. So the 50%, okay, the retracement to the 50% has not yet been touched. So let's put the higher risk entry at the 50% level. 50% will be somewhere over here. So this we call it the high risk. Okay, so now I'm just going to highlight the 50% and the negative 61.8. So there you have it, right? We have a high risk entry and a low risk entry. The high risk entry, of course, the risk reward is a lot nicer. You're risking about 58 pips, okay? And you are going to be making about 90 pips. Okay, so definitely better risk reward than the low risk entry, but it really depends on where you would like to enter. All right, so if I were to bring out stochastics, okay, just look at indicator. All right, it is very interesting to see that if I were to have a higher indicator, okay, we see that the indicator is already reaching the low level. Okay, so there could be a pullback towards the sell entry, the higher risk sell entry before any chance of a entry. We can also take a look at the MACD. Okay, the MACD shows the momentum. We actually see that the bearish momentum, MACD is going to cross below zero, which means that there will be a strengthening of a bearish momentum. So what I'm saying, there could be a small push to this level, a bounce up here, and then a final move down. Otherwise, if the bearish momentum is very strong, okay, it could be a push down to this level, a break, a retest, and just continue downwards. Okay, either way, we follow the bigger time frame, it is definitely bearish. All right, so indicator is telling you that there is short term, there's going to be a small bounce, but overall the momentum is bearish. So let me just change the lines. Okay, I just want to show you guys so it's clearer. So this will be the first take profit, and this could very well be the long-term take profit. All right, so let me just go back to a 4 hour so things easier to see. All right, so this is the idea that we have for the trade of the day. So thanks everyone for tuning in. I hope you guys managed to get a bit of an idea on how to do an analysis, starting off with the longer term time frame and then working your way down to the shorter term intraday time frame. Thanks everyone, and I'll catch you guys tomorrow.